Hello and welcome to our first Global Capital Flows presentation of 2013. My name is David Green-Morgan, Global Capital Markets Research Director at Jones Lang LaSalle, and today I will be presenting the results of our Q1 research and looking forward to what we expect in the remainder of the year. How has the real estate investment market reacted to the events and changes that have occurred in the global economy in the last 3 months, including more central bank liquidity in Japan and further bailouts in the Eurozone? Well, let's find out. And as always, the figures quoted in this presentation are in US dollars. Well, for the first time in 6 years, first quarter volumes, typically the weakest of the year, have passed $100 billion, coming in at $105 billion. All three regions have seen growth over this time last year, with Asia Pacific and Europe seeing increases of 26% and 28% respectively. Asia Pacific even managed to keep pace with the strong fourth quarter volumes, while the other two regions saw declines in line with what we were expecting. The encouraging results for Q1 have helped maintain the momentum in investment markets, with the longer-term average also reaching a post-crisis high. Volumes this quarter have been helped by a substantial number of large deals in Japan, Australia, Russia, the UK and the US, and several portfolio deals in Europe. The improved liquidity position in Japan pushed volume significantly higher, with the REITs particularly active this quarter. As risk appetite has improved around the world over the last 12 months, so the proportion of investment deals involving cross-border parties has increased. As we have seen over the last 2 years, Europe continues to attract the majority of this capital, with another $12 billion flowing into the region in the first quarter to fund purchases. It seems as though the recent crisis in Cyprus has done little to quell the appetite for European product. So what does this all mean for the rest of 2013? With the encouraging start to the year and volumes passing $100 billion for the first time in 6 years, we maintain our forecast of full year volumes being between $450 and $500 billion. We base this forecast not just on the improvement in the volumes in the first quarter, but also on improving investor confidence generally, capital raising being well supported, and the continuing attraction of real estate as an asset class in the current economic environment. Well, that's all for me, and I look forward to bringing you the Jones Lang LaSalle Global Capital Flows update next quarter.